Hey, what's up, Rebels? Welcome back. It's Lex Ravina here, and I've got a question for you. Did you know that you could be totally destroying your credit without even realizing it? You're probably sitting there thinking, nah, I'm good. But if you don't keep track of these 12 sneaky credit killers, you could be sabotaging your future without even knowing. And get this, the average American has no idea how to fix their credit. So if you're wondering, what the heck is going on with my score? Buckle up, because this video is about to break it all down. Let's kick things off with something you might not expect: not checking your credit report regularly. You think that if everything's fine, you're good to go, right? Wrong. Your credit score can drop because of mistakes you didn't make, or worse, fraudulent activity you didn't even know about. Here's a tip. Check your credit report at least once a year. And I'm not just talking about the freebie from Credit Karma. The official website for free reports is annualcreditreport.com. You can get a full look at what's actually going on with your credit history. And trust me, you'll want to. Let me tell y'all why this matters. If you catch a mistake, or even worse, some random dude's late payments in your name, you can dispute it and get your credit score back on track before it's too late. Next up is something you probably never thought of: maxing out your credit cards. It's tempting, right? You've got your credit card limits and it feels like free money. But the more you rack up that debt, the more you're hurting your credit score, especially if you're hitting over 30% of your limit. Never use more than 30% of your credit limit. Trust me, I know it sounds boring, but this is Credit 101. If your credit card has a $1,000 limit, aim to keep your balance under $300. Not only does this help maintain a healthy credit score, but it also shows lenders that you're responsible with your spending. Why this matters? Credit utilization, the percentage of credit you're using, is one of the biggest factors that makes or breaks your score. Stay below that 30% and you're golden. Let's talk about something no one tells you: late payments. Even just one late payment can drag down your credit score like nobody's business. But here's the kicker: a late payment stays on your report for 7 years. That's almost an entire decade. Here's an expert tip: set up auto pay for your bills so you never miss one again. I know we're all busy, but setting up an automatic payment for your rent, utilities, and credit cards can save you a ton of stress and major hits to your score. Here's why this is important. Payment history accounts for 35% of your credit score. So that one late payment, yeah, it counts for a lot. Here's a killer you probably didn't see coming: closing old credit accounts. Sounds like a good idea to close that old card you don't use, right? But hold up. By closing accounts, you reduce your overall credit limit, which raises your credit utilization ratio. Plus, it lowers your credit history length, which can negatively affect your score. Don't close old accounts unless there's an annual fee, of course. Keep them open and use them every so often to keep your credit history intact. Just don't let them sit idle for too long. Lenders like to see a long, healthy credit history. That old account that's been with you for years, it's golden for your credit score. Here's one a lot of people overlook: applying for too many credit cards or loans in a short time. Every time you apply for credit, the lender does a hard inquiry into your credit report, and each one can ding your score. Space out your credit applications. Instead of applying for 5 credit cards in 1 month, take your time. If you're trying to get a car loan or a mortgage, remember that too many inquiries could hurt your chances. Hard inquiries stay on your credit report for 2 years, and too many in a short amount of time can make you look risky to lenders. Let's address the elephant in the room: ignoring your student loans. So maybe you've been out of school for a while and your student loans are collecting dust. But those things still impact your credit score if you're not paying them. Not staying on top of them could seriously hurt your credit in the long run. Okay, here's some sauce for y'all. Contact your loan servicer if you're struggling. There are repayment plans, and sometimes you can even get your loan deferred. Don't ignore them. Your future self will thank you. Why this matters: Defaulting on student loans can devastate your credit and make it impossible to buy a house or car in the future. Let's talk about something a lot of people don't think about: ignoring medical debt. Yep, that hospital bill you haven't been able to pay off. Or that unexpected emergency surgery. If you let it slide, it could end up in collections and hit your credit score hard. Medical debt is one of the sneakiest credit killers, and it can impact your credit for years. If you have medical debt, talk to your provider about payment plans. Sometimes you can negotiate lower rates or even have some debt forgiven. Also, ask your insurance company if they can help. There might be some wiggle room to get that debt off your record. Medical debt is one of the top causes of poor credit for millions. Don't let it silently destroy your financial future. Next up, we've got overusing store credit cards. It feels like a great deal. 10% off your first purchase, right? But here's the reality. Those store credit cards typically come with sky-high interest rates. If you don't pay them off quickly, you're digging yourself deeper into debt. And that's not doing your credit score any favors. Use store credit cards wisely. They can be a good way to rack up discounts, but if you can't pay off the balance immediately, you're better off skipping them. If you already have one, make sure you pay it off in full every month. High credit card utilization can negatively impact your credit score, and store cards are often the worst offenders due to their high interest rates. We're cruising now, but let's wrap up with a quick-fire round of sneaky credit killers. Number 9, co-signing a loan. If the borrower doesn't pay, you're responsible, and it'll hurt your credit. Number 10, too many hard inquiries. Remember, every application hits your score. Number 11, not diversifying credit. If you only have one type of credit, it may hurt your score. Mix things up with cards and installment loans. Number 12, not keeping up with updates. Don't let your credit file get stale. Keep up with your accounts and stay on top of any changes. Okay, let's recap. To protect your credit, you need to stay vigilant. From checking your credit report to not maxing out your cards, every little thing you do matters. And if you're serious about building that credit score up, remember, patience is key. Building great credit isn't a sprint, it's a marathon. So, which credit killer are you guilty of? Drop a comment below and let me know how you're going to level up your credit game. Don't forget to like, subscribe, and hit that notification bell so you never miss out on tips that'll take you from credit beginner to pro. Let's break those credit chains and build a legacy. Until next time, keep stacking your credit and your cash. I'll catch you in the next video. Peace out.